Hello, ladies and gentlemen. Good morning to you all, and I'm so grateful to be here with you this morning. Let's confirm that we are good to go. So, if you can see my screen and you can hear my voice clearly without distortion, kindly type in hi in the comment section so that I can get a feedback that we are good to go this morning. So I would like to see some feedbacks, please. Okay, let's see what we have here. I'm trying to load up my comment section. Okay, I can see 994. Good morning to you. Thank you very much. 3150. Good morning. 987. I see you. 344. I see you too. Hey Valeric, how are you doing this morning? Good morning to you. Quarry CSE, I hope I pronounced that correctly. Good morning to you too. Good morning, Moriel. Good morning to you. 10x Broker. Good morning to you. Hey Steamroller. Good morning to you too. Glad to have you around. I missed you throughout last week as we were doing that follow-up on the XAUUSD. I didn't get to see you on our follow-up details. Hope you are doing well. All right. So let's take this as a confirmation that we are good to go this morning. And on this note, I'm welcoming you all to yet another promising session on the X-Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour I'm going to be your host, where we shall be evaluating the financial market using technical parameters to identify potential trading opportunity ahead of the New York session. And while we're monitoring price action, we are going to be examining together past price patterns, market behaviors, recurring trends, support and resistance levels to gain further insight into the current market structure. And trust me, by the end of the session, you would have digested a whole lot of data that you can eventually use in making your independent decision during the New York session. And for those who are joining us for the first time, you are highly welcome on board. So what we simply do here is to get prepared for the New York session by reviewing the currency of instruments we have been monitoring since the beginning of the week, managing our existing trade while we look out for more opportunities to take advantage of during the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And trust me, with time, you'll get to understand how this works. So try and stay tuned in. And with time, you will be able to make your independent decision using the information you will be gathering during the sessions. So once again, you are welcome. And on this note, I want to be diving right into the business for today. Okay, I see your comments, Team Roller. All right, it's okay. So I'm really glad to have you around. All right, so you know how we do it. The first thing we want to be doing this morning is to keep tabs with the fundamentals by ensuring that we are in purview of what majority in the market are looking forward to. And what we normally look out for in the economic calendar are high impact events that will be affecting any of the currencies that we are monitoring. And for this week, the currencies that we want to be looking out for in terms of the economic data that will be affecting them are the US dollar, the pound sterling, and the Japanese yen. And from what we have on Tuesday, May 30th, we do not have any high impact event that we are going to be looking forward to, as the features we have here does not have any relevance whatsoever with the pairs and instrument we are monitoring. So in that regard, we are going to be dive straight into the current market structure using our technical skills to manage our existing positions while we also anticipate more opportunities on the commodities we are monitoring. So in the last 24 hours, the market has been a little bit phlegmatic across the major USD pairs. And this is as a result of the public holiday that was observed in the US yesterday. I think it is the Memorial Day. And we saw how the market was a little bit slow, but we begin to see some momentum during the early hours of today. So we are going to be looking at how the market has been reacting on the opening following the positive remarks from the president of the US as regards the US debt ceiling negotiation, which he made mention that there is a positive agreement on that one, though there are still some behind the scenes work that needs to be done to get all these things clarified. But we have a positive feedback, and we want to be seeing how the market has been reacting to this development on the chart. So as usual, the first commodity we are going to be looking at this morning is the US oil spot. And on the US oil spot, we have been quite profitable here, as from the look of things on this chart, we have a minimum of 2 positions running on the US oil spot. So we have been selling the US oil spot since the beginning of the week. So let's run through what we saw at the beginning of the week that's incited the idea of selling the US oil spot. So in that regard, what we did here on the, let's scale up into the 4 hours time frame first of all, so that we can look at things together from an holistic point of view. And for the sake of those who are not part of the live session yesterday, you would also have the privilege of being on the same page with us. So right here on the 4 hours time frame, as you can see, you will see that price action has been bearish at least since the beginning of last month. And to further emphasize the strength of the sellers in this market, what I did here was to connect a series of lower highs, giving me the simple bearish trend line that you can see on your screen right now. And in fact, this trend line has been supporting the bearish momentum ever since the beginning of last month, and it has also been guiding our trading activity. And one thing that we observed since the beginning of this month was that price action has been quite choppy, where price action has been ranging between the $74 level, which happened to have been a very strong selling niche since the beginning of this month, and we have the support line area at the $70 zone. So it's clear sign that we have an indecisive phase in this market, as majority are still trying to test water to see where price action is likely going to be going. And remember, during the course of last week, we had a interesting comment from the Minister of Energy of Saudi Arabia, where he said that it made it something like a threat, I will call it. He said those who have been shorting the oil, we are going to be ouching, using his own words. And from the look of things here, we haven't seen any significant impact as regards that comment he made, as we were expecting that bullish momentum will come in. But instead, in the last couple of weeks, though we had some bullish traction, but price action has been downing on the US oil spot. And we also anticipate the OPEC Plus meeting on the 4th of June. That's like 5 days from now. 5-6 days from now, we're expecting the OPEC Plus meeting, which majority in the market will also be looking forward to, and might be the reason why we have been witnessing this choppy situation, as majority want to see what the outcome of that meeting will be, so that we can make an informed decision. Now, during the course of last week's trading session, what we saw here on the US oil spot was a significant breakout of the bearish trend line here, which happens to be the first time price action will be breaking out of that trend line. And with the breakout of that trend line, we saw the bullish momentum to the upside, which we actually took advantage of. And we also saw how price action came back to retest that trend line. And at this point, we had a major confluence here, where price action meets the bearish trend line, the bullish trend line, and that demand zone here had the $71 area, which incited a bullish traction during the second half of last week. And at the beginning of the week, we were hoping that this bullish traction will continue. So we had a key level at the $73 area. That was yesterday, where we said this level is going to be guiding our trading activity for the week. And you can see this level has been a major determinant of price action since the beginning of this month. And what we agreed here yesterday is that if price action trades above that key level and continue buy pressure above that area, we shall be looking out for buying opportunities. But if price action drops below the key level at the $73 area, then obviously we are going to be looking out for selling opportunity. And if you look at what happened here, we saw the breakdown of structure, which actually incited the bearish expectation that we had in this market. So when we scale down into the 1 hour time frame, this was what we observed since the beginning of the week. Remember, we wanted to know how majority in the market will be reacting to that our key level at the $73 area. And this was exactly what we saw. We saw how price action was caught within that range between the $73.55 level and the $73.05 area to give us a sign of the level of indecision at that particular point in time. And during our live session yesterday, we acknowledged the fact that price action had broken down that support line here to incite a bearish signal. And I told us all yesterday that for those who had missed out on this opportunity, that we want to remain patient, waiting for structures to mature. And one of the structures I made mention of yesterday is the potential of price action coming back to retest the key level that was broken to incite another wave to the downside. And this was exactly what happened here. Immediately, I think during the later part of the New York session yesterday, we saw how price action came back into the key level, saw selling pressure, and this incited a bearish move. So if you are taking advantage of that move at that point, well done to you for being on standby to catch that move, as you will currently be running with over 170 pips in profit. And remember, yesterday we also acknowledged the $72.30 area, where we said a breakdown retest of that structure also will be welcoming more opportunity in this market. And this was also what happened. As you can see, we also had price action breakdown, and if you are taking advantage of that move, that one right there is running with about 95 pips in profit. So far so good this week. We have been quite profitable on the US oil spot, and you know how we do it. Whenever we have price action move significantly well in our favor, the next thing we want to be doing is to secure this current position by moving our stop losses accordingly to lock in some profit. And from the look of things right here, and judging from this current structure, the most appropriate area I think we can move our stop losses to is that area above the $71.80 level. So this is a key level I identified during the early hours of today after monitoring how participants has been playing out with the current market structure. Now, with that being said, with our position secured right now, and for those who had missed out on this opportunity, we are going to be looking out for another opportunity to trade the US oil spot. And the question from this current structure is that, will this bearish momentum continue to the downside, or are we going to be seeing a reversal pattern that will be inciting another wave of bullish momentum anytime soon? So in order to dissect this and have a better perspective into what is going on at this point, let's scale up into the 4 hours time frame, so that we can look at things from an holistic point of view. And I'll also be sharing with you why I have identified another key level at the $71.80 area. Now, back into our 4 hours time frame, one of the key structures I would like to share with you here on the 4 hours time frame, which we are going to be using to guide our trading activity for today, are The first one here is the bullish trend line, which price action has been respecting since the beginning of this month, giving us a sign that buyers are trying to break out of this choppy situation that we have been witnessing since the beginning of the month. So we have a trend line here after connecting the series of higher lows, and then secondly we also have a demand zone at the $71 area. And as you can see here, in the last couple of weeks in this market, we have seen how sellers have found it very difficult to break down the structure. And at every point in time we saw any seller's attempt, we saw how buyers jumped in to negate any bearish momentum from this area. And with the look of things right now, it appears price action is approaching that demand zone one more time. So you would agree with me that we are at a critical point in the market right here where anything could actually happen. The question that we are going to be asking now is, are we going to be seeing buy pressure resume again from this demand zone to incite another bullish momentum like it has always been doing in the last couple of weeks? Or are we going to be seeing price action break down that demand zone to incite another wave of bearish momentum to the downside? So this is what we are going to be looking at today. And before we scale down into the lower time frame, I also want to acknowledge the fact that price action a couple of hours ago broke down the bullish trend line, which has been supporting the bullish momentum since the beginning of the week. And if you look at the 4 hours candle here, the 4 hours candle is about an hour 21 minutes old at this point, so we still have about an hour 39 minutes to go on this candle. So we can't really say that we already have a breakdown of the trend line, as it could still turn out to be a false breakdown where this candle could evolve into an hammer candle, which is a sign that buyers are present in this market to incite another move to the upside. So we are going to be very, very careful here. That is why I've told us all that all our sell positions here, we want to move all stop losses to secure the current sell position while we wait out and see how price action will be reacting to this current structure. So at this point, that is what I want to let us see here on the 4 hours time frame before we scale down into the 1 hour time frame. But another thing I also want us to do here is to acknowledge a key level within that demand zone, which we are going to be using to guide trading activity. So I would like to choose the lowest point, and we have a level here at the let me choose the $71 area, which looks promising from this current structure. So we use the $71 area. So I will relabel this one and name it the $71 level. So right now we can see how that $71 level had been a major determinant of price action in the last couple of weeks. We saw how it was a buy pressure here, selling pressure around this area. Then since then it has been a strong buying niche. So this whole structure is right within that demand zone. Now it depends on how price action reacts to the $71 area that will determine our next line of action. So if price action breaks down, retests the $71 area, then we will have no other choice than to start thinking of selling the US All Spot. But if we start seeing buy pressure above the structure, there is a high chance that we might be seeing another wave of bullish momentum. But if we are going to be buying after the appearance of buy pressure above the structure, we want to take note of the $71.80 area and this trend line, where if price action gets into that area, we want to be moving our stop loss accordingly to lock in some profit, as we want to see how price action will be reacting to the zone to determine if this bullish moment, this buy pressure we saw here, will incite the trend, the upward momentum, or it could probably retest the structure to incite the trend continuation to the downside. So let's keep this in mind while we mark this whole structure out on our chart. So scaling down into the 1 hour time frame in anticipation of today's trading session, I hope you have moved your stop loss accordingly. Very, very important at this point. And so let's see, like I said earlier, let's see how price will be reacting to this level at the $71 area to see what our next line of action will be. So any buy pressure above this area has a potential of giving us buying opportunity, and like I showed you on the 4 hours time frame, we want to see something like a double bottom structure where a breakout of the neckline area will incite the bullish move, and as soon as price action gets into that area at the $71.80 level, we move our stop losses, secure the position, and wait to see how price action will be reacting to this area to decide if we are going to be selling or adding more buy position to our existing trade. So these are my views here on the US oil spot today as regards buying the US oil if buy pressure resumes above the $71 area. But if it so happens that price action drops below the $71 level and something like this retest of structure, then we want to be looking out for selling opportunities. And one thing that could also happen is price could still come back into this area to incite that bearish move. But as long as we have a breakdown of the $71 area, we should start considering selling the US oil spot or adding more position to our existing trade. So these are my views here on the US oil spot for today. If you have any questions whatsoever regarding what I just explained here, feel free to let me know in the comment section, and trust me, I am willing to be of help in that regard. So let's see what we have here in the comment section, if there are any questions whatsoever, and if there are none, we'll just move on to the next option. Okay, I can see Cast here. Cast, good morning to you. Sergio, good morning. Jan Crescentis, good morning. Skyborn, I see you with 7-1. Tilala, all right, good morning to you. Steamroller is asking, are we still doing XAG this week? Oh, no, we are not. We are not. All right, we are not. We didn't include it on Monday on our watch list, so we are not doing XAUUSD this week. I'm sorry about that. All right, so in the absence of no questions, I want to assume that we're on the same page here. So let's move on to the USTech100, which is the next option we are going to be looking at. And on the USTech100, we had a pretty setup here yesterday where we saw our price action was ranging between the 14,415 and the 14,350 area. So it was a beautiful flat channel we saw here at the beginning of the week, and it was quite a good structure to work with. And you know how we do it. Whenever we have this kind of simple setup, we want to remain patient here, waiting for structures to mature to give us an opportunity to either buy if price action breaks out of that structure, or sell if price action break down the support line. And if you recall yesterday what I said here, that we want to be having a buy stop order above the $14,415 area, as there is a high chance that this old structure we have here could turn out to be a trend continuation pattern. And after considering the impulsive move that got us to this point, we were of a high chance that price action would break out of that structure. And the other situation we said here is that price could still incite a retracement of that impulsive move that got us to this point. And one thing I said here is that we want to see price action break down the structure to give us a sign that sellers are gradually gaining some momentum to push price to the downside. Then we wait for a retest of structure before looking out for continued selling pressure below the 14,350 to give us a confirmation that we want to be selling. But what we saw here yesterday was a little bit very confusing if you would ask me, because we saw price action break down the structure actually, and we were expecting price action to come back and give us some selling pressure where buyers should be finding it difficult to climb above the 14,350 level. But what we saw here is that buyers were still trying to make a statement around that area, hereby negating the potential of selling below the 14,350. So we have seen now at this particular point in time that price action has triggered our buy position at the 14,415. And for those who are taking advantage of this opportunity, well done to you for being on standby, as you will currently be running with about 50 pips in profit. And if you would ask me, it is quite reasonable at this point that you want to be moving your stop losses to secure this current buy position. And the most appropriate area, I think, is our entry point, of course, which the worst case scenario here is if price action reverses, it will take us out at break even. Now, with the position secured at this point, what is going to be our next line of action? And for me personally, as long as we already have a breakout of that resistant line at the 14,415, there is a high chance that price action will continue to the upside. Now, for those who had missed out on this opportunity, how do we intend to be part of this trend continuation if price action continues to find higher highs? Well, the first thing I would like to say here is that for those who had missed out, you want to remain patient at this point. We don't want to jump into a moving train, as we want to see new structures mature before we want to join any potential move. And one of the structures that we are going to be considering here, after citing the breakout of the resistant line, is the possibility that price action could still come back to retest the structure that was broken. So this is one of the scenarios we are going to be looking at while we monitor price action from this current structure. So if price action at any point in time during the New York section comes back into that area to do a retest of that level, the appearance of buy pressure around this area will give us an opportunity to be part of a bullish move to the upside. And one of the things we are going to be doing as soon as price action gets into the $1,415 area is to move into the lower time frame. It could be your 10 minutes, 5 minutes, or 15 minutes time frame to look out for structures that will support price action is gradually gaining the momentum to push to the upside. And one of the things we are going to be looking out for on the lower time frames are reversal patterns. It could be a double bottom structure, head and shoulder pattern, falling wedge, whichever case it may be. What we want to see here is signs that sellers are finding it difficult to stay below the 14,415, after which we look out for buying opportunity around that area. So that is one scenario we are going to taking into consideration. So you want to mark this out on your chart, write it down on your journal. We are looking forward to that opportunity if price action comes back to retest the structure. And one thing about the retesting of the structure is that price could still go as far as dropping to the downside here into somewhere around here before another wave of bullish momentum happens. Let's put this in mind too as well. And why have I said that? Well, if you look at how price action started this week, you saw how it started on a bearish note. We saw lower highs here, and remember we had this trend line figured out during the live session yesterday, giving us a bearish trend line after connecting the series of lower highs. Now, with the breakout of the structure during the early hours of today, there is a chance that price action could still come back and retest the trend line that was broken to the upside. So there are two ways to look at this. So we have a bust stop here at the 14,415. If buy pressure resumes around that area, we look out for buying opportunity. But if price action drops below the 14,415, then we have the second bust stop here at the 14,350, where we are going to be looking out for reversal patterns to be part of a bullish momentum to the upside. So let's keep this in mind. Now, the last expectation here, that is, if price action does not drop into any of the structure, but instead continues to find higher highs, how do we intend to take advantage of that opportunity? Well, if you look at the structure here, you will see that we already have a resistant line had the $14,470 area, which happens to be the highest point price action has been for this week. So let us label that area for the sake of clarity. So we have the $14,470 level. So we have a resistant point to also use as a yardstick to guide trading activity. So like I was saying here, if price action does not drop to the downside, but instead continues to find higher highs, then a breakout retest of the 14,470 should be giving us the opportunity to be part of a trend continuation to the upside. So let's be on standby for this opportunity. So we also have a level here at the $14,470 area, which will also be serving as a yardstick to guide a bullish momentum from this current structure. So let's see how price action plays out in the next couple of hours. I'm very sure by the start of the New York session, we should be able to see signals of where price action is likely going to be going. So if it drops to the downside, remember we have a bust up here to join a trend continuation. And in fact, if it drops below, then we also had a bust up here to join the trend continuation to the upside. And one most important pattern we want to be looking out for to join the trend continuations are reversal patterns. So whatever reversal pattern that comes in, let's be on standby to catch that move to the upside. And if price does not drop, then a breakout of the 14,470 will be welcoming the buy opportunity we are looking out for. So on the USTech100, the buyers here still remains bullish as long as price action remains above this old structure that was broken yesterday. So let's continue to look out for buying opportunity on this one. And if price action does the opposite here, well, the only way I will be thinking of selling the USTech100 today is if price action drops back below the 14,415. Now, don't get things confused at this point. You might be asking me, oh, but you said if price drops below, then we wait for the bust up around this area. Yes, I did say that. But one thing here is this. It's quite different from what I said earlier. If you look at the breakdown of the 14,415, and one thing we want to see here, we're not jumping right in when the breakdown happens. We want to wait and look out for confirmation on our lower time frame. So if price drops below the 14,415, we want to see some retest of structure. So mind you, if you want to see this confirmation, you want to scale down into a lower time frame. Your 10 minutes, your 5 minutes, or your 50 minutes time frame is your best friend to look out for this kind of opportunities. So a breakdown of the 14,415, we want to see signs that buyers are finding it difficult to climb back above, and continued selling pressure below that area will now give us a selling opportunity to join a bearish move to the downside. Now, there is a caveat to this setup. So when price action continues to the downside, as soon as it gets into the structure, which I told you earlier is going to be serving as a bust stop for buying opportunity, we want to move all stop losses on the sell position, secure the current position while we wait out and see how price action will be reacting to the 14,350. Now, if buy pressure resumes around that area, then the bullish momentum we're expecting earlier is now coming to stay. Then we want to join the move to the upside. Then it will take us all out of our sell position with a small profit. But if it so happens that price action breaks down the 14,350, continued by selling pressure below this area, then at this point we want to be adding more position to our existing sell position on the USTech100. So I hope this is well clarified here. If you need me to do further clarifications or you need me to shed more light, let me know in the comment section, and I will try as much as possible to make things clearer for you. So that is how we are going to be looking at the USTech100 for today. So let's see how things plays out here, and trust me, we shall be here tomorrow to review and see how well this commodity has been doing. So with that being said, here on the USTech100, let's go right into the next instrument for today. And the next one we are going to be looking at is the GBPUSD. Now on the GBPUSD, we have a very interesting profitable position right now, as I already have two positions running on this commodity. So let's quickly look at what is really going on in this market. I think I have my TP target at the 1.25, so I have a long-term view here on the GBPUSD. So let's look at what is really going on in this market. Now, the first thing we are going to be doing here is to scale up into the 4 hours time frame. And for the sake of those who are not part of our live session yesterday, let's see how the market has been playing out since the beginning of this month, and also see why we thought of buying the GBPUSD at the beginning of the week. So the first thing we saw on the 4 hours time frame was the fact that price action has been bearish. And when we look at what has been happening since the beginning of the week, connecting the series of lower highs gave us this beautiful bullish trend line that you can see on your screen right now. And this trend line has continued to support and guide our bearish positions throughout the last couple of weeks into the current structure we are in right now. And when we zoom right into what happened during the course of last week, we were able to identify a couple of key levels which we said we are going to be using to guide our trading activity for today. Now, one of these levels is the 1.23750, which if you go to as far back as the 18th of this month, you will see how this level had been a major determinant of price action. It was initially a strong demand zone, which you can see here, before price action broke down that structure during the previous week here. And since the breakdown of this level happened last week, we have seen how that same area had continued to negate all bullish attempts leading into the early hours of this week. So this was what we saw here prior to the beginning of this week. Now, one thing we saw here is that as soon as price action got into the 1.23 area, we saw how buying pressure resumed in this market. And to further emphasize the strength of the buyers here, we begin to see higher lows at this point. And at no time did we see price action come back to break down the previous low. Instead, price action continued to find higher highs, giving us an idea that we might likely be seeing a reversal pattern gradually unfolding here. And what we saw during our live session yesterday was something that looked like a double bottom structure, which from a technical standpoint is a strong reversal pattern. And you know how we do it. Whenever we identify a potential reversal pattern unfolding, the next thing we want to be doing is to identify the neckline of that reversal pattern. And when we do that correctly, you will see how the neckline we identify coincidentally shares a confluence with that 1.23750. And what makes this level more interesting is the fact that it also shares a confluence with that bearish trend line that we identified earlier. So if price action at any point in time breaks out of the 1.23750, price action would have broken out of that trend line, which is a very good sign that the trend line may no longer have the capacity to reject the bullish attempts around that level. And we all know how we do it. A breakout of that structure will confirm the reversal pattern. And as you can see what happened here, price action finally broke out of that structure a couple of hours ago to give us a sign that buyers are getting stronger at this point. And congrats to everyone who are taking advantage of this opportunity, as you will currently be running with over 50 pips in profit at this point. So let's scale back down into the 1 hour time frame to see what really went on the much more lower time frame and how we intended to buy at that point. So this is what we saw here, and we have the buy position first of all at the 1.23580. Remember, we had this structure identified here yesterday between the 1.23580 and our key level at the 1.234. And with our key level at the 1.234, you know that when price action remains above our key level, we are going to feel comfortable in our buy position. And coupled with that is this bullish trend line, which we identified also, which has been supporting higher lows here. And as you can see, price action continue to remain above that structure. Though we had the false breakdown happen here during the early hours of today to shake out a lot of buyers in this market, but immediately price action climbed back above that level, and since then price action has been finding higher highs in this market. So congrats to everyone who has been part of this position that we have here. So hold on a second, please. I think I have network issues. Hold on a second. Let me try to sort things out, and I'll be right back in a moment. Sorry for the break in transmission. We had network issues and we had to sort it out, but things are fine right now. And like I was saying earlier, we were talking about the GBPUSD and how we took advantage of the buy position we have running at this point. And I was trying to emphasize the structures that actually supported this bullish momentum. And I was talking about the bullish trend line here, which we identified during the live session yesterday, which we said we were going to be using to guide our trading activity. And though we had a breakdown of the structure during the early hours of today to shake out some buyers, and since then price action had broke out of the key levels that we were looking out for buying opportunities. So with a buy stop order above the 1.23580 and the 1.23750, we had our buy position triggered, and since that moment we have seen our price action had significantly moved in our favor. So we have the first position running with about 70 pips in profit, and we have the second position running with about 52 pips in profit. So we have a total of 120 pips in profit on this one. So for those who are taking advantage of this opportunity, well done to you for being on standby to have caught this move. And you all know how we do it. Whenever price action moves significantly well in our favor, the next thing we want to be doing is to move our stop losses accordingly to lock in some profit. And at this point, and based on this current structure here, I want to suggest that anywhere below the 1.240 area seems most appropriate to lock in that profit at this point, as we have a structure around this area which has been a major determinant of price action in the past. So let's kindly move our stop loss to anywhere right below the 1.2400 area to be part of the continued trend continuation to the upside. So let's see how price action plays out. We want to give room for price action to breathe, and let's see how this goes. Now, for those who had missed out on this opportunity, well, what I will be saying here is that we want to remain patient. Of course, we want to wait for structures to mature, and wait to see if price action will be coming back to do some retest of this level. Now remember, we had the breakout of the 1.23750 here, so there is a chance that price action could still come back and retest that structure in anticipation of another wave of bullish momentum. And one thing about that structure is that it also shares a confluence with that bullish trend line. So let's see if the market will be coming into that area to retest it to continue to the upside. So that is one of the scenarios we are going to be looking forward to here to join a trend continuation to the upside. However, if price action does not drop that far and we start seeing trend continuation patterns around that 1.24300 area, how do we intend to take advantage of that move to the upside? Well, the first thing I would do here is to bring out my line chart and let us identify another resistant line that we are going to be using to guide our trading activity for today. So I have something around the 1.243, yes, 1.24300, somewhere around here, which is another strong psychological level that we also want to be using to guide our trading activity for today. So let's label that area the 1.24300 level marked out. And if we bring out our candle chart here, you will see how that level has been a major determinant of price action in the past. Look at what happened here last week. We saw buying pressure here. Then we saw how sellers came in, breakdown retest happened there. Then we saw selling pressure around this area again, and that was on Wednesday of last week's trading session, respecting that trend line one more time. And right now price action is gradually approaching that level. So we are at a critical point in the market right now where, depending on how price action reacts to this area, will determine what our next line of action will be. And one of the situations that could happen from this current structure is continued selling pressure could resume again to give us that retracement back into the structure I was saying earlier to incite another wave to the upside. That is one scenario we are going to be looking forward to. Then the other potential thing that could transform on this area is price action could transition into a trend continuation pattern around that 1.24300 area, which will reflect on the chart as a choppy situation, or it could be a consolidation phase, giving us something like a trend continuation pattern where the breakout of the resistant line of that pattern will be welcoming more opportunities to buy the GBPUSD at this point. So we are at a critical level in this market right now, and it is important that we remain patient to see how participants in this market will be reacting to this current structure in the next couple of hours. So we are looking forward to either selling pressure around this area to bring price to retest the structure that was broken earlier to incite another wave of bullish momentum, or even go as far as breaking down the trend line to incite a sell-off in this market. And the other option here is price could break out of that structure after a reversal pattern, after a trend continuation pattern around this area to incite another wave of bullish momentum. So let's be patient here. Let's wait out for our structures to mature around the 1.24300 level to decide what our next line of action is going to be. So if you have any questions whatsoever, feel free to let me know in the comment section of this current video you are watching. So with that being said here, I will be moving on to the next pair because of time. But if you have questions, I will be checking the comment section from time to time to see if I have any to attend to. So I will be moving on to our next pair right now. And the next pair we are going to be looking at is the... Have we treated the XAUUSD? I don't think so. Okay, let's go into the XAUUSD. And what are we seeing on the XAUUSD? Now, on the XAUUSD, we have quite an interesting situation going on right now on this commodity. And if you remember vividly, during our live session yesterday, we were looking at the potentials that buyers might likely come in at any point in time in this market. So for that sake, let me show you what we saw on the 4 hours time frame that helped us to project a potential bullish move for this week. Though we saw the situation on the 4 hours time frame where things were looking a whole lot of bearish at this point, and to emphasize the strength of the sellers here, we had a couple of trend lines after connecting the series of lower highs. But I made mention here that I'm going to be using this trend line, the thick one here, as a yardstick to guide our trading activity for this week. And one thing we did after spotting this bearish trend line was to zoom into this current structure to look at what has really been going on in this market in the last couple of weeks. And when we zoom in, we saw how price action had been caught within a choppy situation. We had one where price action initially was ranging between the $1,980 level and the $1,960 area, to emphasize the level of indecision at that point. Now, with this situation we had here, we were expecting that the breakdown that happened last week here, right here, the breakdown of that support line was a clear sign that sellers are still very strong in this market. But one thing that caught our attention during the live session yesterday was the fact that as soon as price action got into that area around the $1,940 level, we begin to see some buy pressure resume from that area, hereby negating all attempt by the sellers to continue that trend to the downside. And because of the appearance of this demand zone yesterday, we decided that we are going to be looking out for buying opportunity. And not only if price action breaks down that structure, we will be thinking of selling at that point. But as long as price action remains above the 1,940, we agree that we are going to be buying at this point. And to further buttress the potential of a reversal pattern here, we visually represented this after considering the impulsive move into the structure. As you can see, we saw price action come into that area, the 1,952. Price was unable to break the previous low, giving us a situation that is looking more bullish at this point. And with the situation we had here, we had the buy stop order placed at the 1,952, somewhere around here, with our stop loss sitting somewhere within this demand zone at this point. And what happened here yesterday was quite interesting. We saw a bullish momentum which did not reflect on most of the charts that is in the market. This was behind the scenes. This was happened outside the market. I think the major key players in the market did this, and during the early hours of today we saw price action drop back into the downside. And at this point we had another situation where price happened to have broken out of the 1,952 one more time to incite another wave of bullish momentum. So at this point in time, we scaled down into the 1 hour time frame to identify a simple setup that we were supposed to be using to guide trading activity for the week. And one thing we observed here yesterday is the choppy situation, the consolidation between the 1,947 and the 1,940. And I told us yesterday that if we are going to be buying the XAUUSD, we want to see price action break out of the 1,947 to have a buy position triggered. And if we are going to be selling, a breakdown of the 1,940 should give us an opportunity to do that. Though we had the breakdown here, and I do hope you moved your stop losses after price action moved about 80 pips in our favor before we were taken out of that position. And since this morning now, we have seen a breakout of the 1,947, which is one of our key levels to buy the XAUUSD. And we also have a breakout of the 1,952, which was another level to add more position to our existing trade. And we also have another key level here at the 1,960, where I said more buy opportunity above that structure will be become valid, as if price breaks out of the 1,960, we shall be back within the buyer's territory, an area which has a strong memory for buying power. So for those who are taking advantage of these opportunities at the breakout of the 1,947 and the 1,952, well done to you for being on standby, as the first position here will currently be running with 92 pips in profit, and the second position here will be running with about 37 pips in profit. So well done to you for being on standby to have caught this move, and you know how we do it. The next thing we want to be doing right now is to move all stop losses to secure this current position. And from the look of things, the last structure we have here is that area around the 1,952. So this area here seems most reasonable to secure all buy position in this market, while we look out for more opportunities to add more position at the breakout of the 1,960. Now, for those who had missed out on this opportunity, well, you want to remain patient here. We want to see new structures evolve before we want to be adding more position or joining outrightly. And one of the situations we are going to be looking out for around this area is a retest of structure. So if it happens that price action retest any of the structures during the New York session today, it could be the 1,952. The most important thing we want to be seeing is buy pressure, and if this happens on our lower time frame, then we could be in to join another wave of bullish momentum with a buy stop order above the 1,960 to add more position to our existing trade. And if it so happens that price action drops below the 1,952, we have a bust stop at the 1,947, where we shall be looking out for buy pressure to be part of the trend continuation to the upside. So these are the things we are going to be looking at as regards taking advantage of more buying opportunities in this market. The other scenario that we might want to be looking at is the expectations that sellers might likely come in from the structure. And if I am going to be selling, I think I need to readjust the trend line here. Okay, so if we are going to be selling from the structure, I would want to see price action drop below the 1,940 sincerely because of this demand zone that we have here. So I would want to see price action drop below the structure before I want to consider selling the XAUUSD today. And I doubt if that is going to be happening, as I'm of the opinion that a bullish momentum will continue to the upside. But if it happens that price action drops below the 1,940, then we want to see have a sell stop order here below the 1,940. The reason why I said we are going to be having a sell stop order is simply because we already had a breakdown of the structure earlier today. So we should have a sell stop order below that structure to be part of that move, but I doubt if it will happen today, actually, considering the bullish momentum we have been witnessing so far. But if it happens, we want to be on standby to catch that move. And you might also want to maximize the bearish expectation in this market. That is, you want to sell even before the breakdown of the 1,940 happens. And if we are going to be selling before the breakdown of the 1,940, then we want to look at something like this: price action dropping below the 1,947, continue selling pressure below the structure to be part of the bearish move to the downside, and then have your sell stop order triggered when price action breaks down the 1,940. So that is how we are going to be looking at the XAUUSD today. So mark these key structures out on your chart, screenshot my screen if you want to, so that you can use it as a reference point when you're about to make your individual decision on this commodity. 756 says USDJPY. Of course, USDJPY is one of the instruments on our watch list, so we are going to be treating the USDJPY in just a moment. Okay, so the next commodity, the next instrument we are going to be looking at this point is the USDJPY. Of course, I hope 756 is still around. So we are treating the USDJPY right away. And what did we see on the USDJPY yesterday? Remember, we had this bearish expectation on this chart. If you remember vividly, we saw this situation where price was trapped within a range. Should I show you the 4 hours time frame first of all before we go into the details on the 1 hour time frame? I think that will be preferable, especially for those who are not part of our live session yesterday. So let's go into the 4 hours time frame here, and let's look at what is really going on from an holistic point of view and look at what we have here on the 4 hours time frame. So on the 4 hours time frame, what I did here was to take into consideration price action activity since the beginning of this month, and what I was able to come up with here is a uniform ascending channel. As you can see, price action had continued to find higher highs and higher lows, and when we connect the series of higher highs and higher lows here, we have this simple ascending channel which we have been using to guide our trading activity in the last couple of weeks. Now, another thing I would like to call our attention to within this channel is that this channel is splitted into half, and the upper half of the channel is, you can see, buy pressure above that area is giving us a sign that buyers are very strong, as at no point in time did we see price drop to the second half after on the 16th of May. And with this situation here, it gives us a sign that as long as price action remains above that first upper half of this ascending channel, we want to continue to look out for buying opportunity. But something interesting happened during the course of last week's trading session, and so I will be zooming right into the new structure that we are going to be using to guide our trading activity for this week, and that is the 140.750 level. Now, we saw the situation happen on Friday of last week. As soon as price action got into the structure, we saw selling pressure resume around that area. And one other thing that made this whole area interesting is the fact that the 140.750 also shares a confluence with the resistant line of that ascending channel. And this is a sign that we might likely see price action retrace probably into the support line of this ascending channel right here to incite another wave of bullish momentum, or probably break down that structure, retest it to incite a sell-off in this market. So these are the things we are going to be looking at here, and with the continued selling pressure around the 140.750, as you can see here, during the early hours of today, we saw as soon as price action got into that 140.750, we saw another sharp rejection of that area, giving us a shooting star candle, which from a technical standpoint is a sign that sellers are still very, very strong in this market. So to guide our bearish move going into the New York session today, we already have a key level mapped out, which is around the 140.00 area, which was broken last week. So we want to see price action drop below the 140.00 level to give us that selling opportunity. Then we also have a structure here at the 139.700, where another breakdown of that structure will be welcoming more sell position in this market. So we are going to be having our TP target anywhere around that support line, which is looking at around the 139.00 area, and that will be dovetailing to about how many pips that is. So on the first position, we could be having over 100 pips to catch there, and on the second position here, we should be having over 80 pips to catch there. And depending on how price action reacts to this trend line will now determine if we are going to be getting ready to buy. That is, if we start seeing buy pressure, then that means the support line is going to be respected one more time to incite another wave of bullish momentum. But if it so happens that the support line is broken to the downside, then a retest of structure will definitely welcome a sell-off in this market, hereby giving us the privilege of adding more sell position to our existing trade. So that is how we are going to be looking at the USDJPY from an holistic standpoint. And the only reason why I'm going to be looking out for buying opportunity here is only if price action takes out the 140.750. As you can see here, since last week, this area has been a strong selling niche, and to buy the USDJPY, we would rather see price action take out all the sell positions there to give us the confirmation to buy. But at this point in time, it's not looking visible here. Things are looking very bearish, as continued selling pressure below the 140.750 area has a high chance of pushing price to break down that trend line, the 140 and the 139.700 area. So let's see how things plays out going forward, and to help us position ourselves in such a way that we can catch these potential moves, let's scale down into the 1 hour time frame, where we have a simple setup you and I can use to guide our trading activity. Now, scaling down into the 1 hour time frame, this is what we have here. And remember, at the beginning of the week, this is what we projected. We initially saw how price action was ranging between the 140.920 and the 140.530 at the beginning of the week. And this helped us to sell the USDJPY yesterday, as we saw the breakdown retest of the 140.530 to trigger that sell position. And on both occasions, we saw how price action moved. This one moved about 42 pips in our favor, and the second one also moved about 50 pips in our favor before this buy pressure resumed. And I do hope you moved your stop losses accordingly to secure your positions like we always do, so that we don't get caught up in any sudden situation that will take us out in a loss. And if you had done that, the worst case scenario you will have been on those sell position was a break even. Now, like we are saying on the 4 hours time frame here, we already mapped out the 140.0 level, a level which has been a major determinant of price action since Thursday last week. We saw this area was a strong selling niche before this level was broken on Friday to the upside, and we have been sighting buy pressure around this area. And I think at this point I already have a sell stop triggered here, because I had a sell stop just right below the 140.00 area to trigger my sell position. So if you have your sell position triggered there, well done to you. Let's see how far this momentum is going to go. Our stop losses should be somewhere around the 140.530, which will be dovetailing to about 45 to 50 pips stop loss thereabout. Let's see how this plays out, and if it so happens that price action breaks down and gives us some retest of structure on our lower time frame, continued selling pressure right there, this will give us more opportunities to add more position. With more sell stop below the 139.700, we could maximize the bearish potential move to the downside. So these are my views here on the USDJPY for today. So I'm already out of time here, and I'm glad that we were able to finish up with all the instrument that we are going to be monitoring for this week on this extra speed session. I hope you had a wonderful moment out there, and I'm very confident that we are well equipped to be able to take advantage of any potential trading opportunity during the New York session today, as we were able to simulate all the potential opportunity that the market could present during the New York session. So I just hope that we all be on standby, allow our structures to mature before we enter any move at this point. So on this note, I want to wish you best of luck during the New York session, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this instrument we are monitoring has been doing so far, and at the same time get ready for the New York session tomorrow. And for the newcomers in the house, I hope you are able to gain one or two things from the session. It might look a little bit overwhelming at first, but trust me, it's quite simple. Just try to be with us on our next sessions and the subsequent sessions, and with time you will be able to use the information you gather here to make your independent decision on your account. On this note, I wish you best of luck today, and do have a wonderful evening, everyone. Bye bye. Moise82, I see your comments. Best of luck today. Thank you very much.